Hey everyone, welcome back to the channel. I'm Alex Morgan, and if you're new here, welcome. Make sure you hit that subscribe button and ring the notification bell so you never miss our weekly market breakdowns. We crossed 50,000 subscribers last month, and it's all thanks to you guys watching, commenting, and sharing these videos. Seriously, the community here is incredible. Now let's get straight into it because today's topic is absolutely on fire right now. We're talking about silver, the white metal that has been on a wild roller coaster ride in 2026. And more specifically, we're going to break down exactly how the escalating tensions between the United States and Iran are directly pushing silver prices higher. This is not a theoretical discussion. This is happening right now as we record this video on February 21st, 2026. The news cycle is moving at lightning speed, the geopolitical situation is razor thin, and if you hold silver, trade silver, or are thinking about entering this market, you absolutely need to understand what's going on and where this is headed next. So grab your coffee, sit tight, and let's dive deep. Before we talk geopolitics, let's anchor ourselves with the current numbers, because the data right now is truly staggering. As of today, February 21st, 2026, silver spot price on the US market is trading in the range of approximately $82 to $85 per ounce. Now, if you're a longtime viewer, you'll remember that silver was sitting around $34 per ounce in early 2025. That means silver has gained roughly 148% in just over a year. That is one of the most extraordinary runs in the history of this precious metal. But here's what really grabs your attention. Silver hit an all-time high of $121.67 per ounce on January 29, 2026, just about 3 weeks ago. And right now, it's trading about 30% below that peak. So naturally, the first question everyone is asking is this a pullback before the next leg up, or has the silver bull run come to an end? And the answer to that question, as we're going to show you today, is directly tied to what's happening between Washington and Tehran. Now, just this week alone, silver posted a weekly gain of more than 5%, climbing from near 2-week lows back up toward that $82 to $83 range, building on 3 consecutive days of gains. According to technical analysts at FX Street, the short-term momentum is strengthening on the 4-hour chart, with price pressing against the upper Bollinger Band, the MACD holding in positive territory, and the RSI sitting near 66, signaling firm upside traction. Dip buyers are clearly still active in this market, and a very specific catalyst is driving that: the crisis between the United States and Iran. Now let's set the scene on the geopolitical side, because unless you've been living under a rock this week, you know things have gotten extremely serious between Washington and Tehran. And I want to be very clear here. We are not talking about distant diplomatic noise. We are talking about a situation that analysts are describing as one of the most dangerous flashpoints the Middle East has seen in years. Here is the timeline of how we got here. Back in late 2025, tensions between the US and Iran began escalating sharply following a US-Israeli military operation that struck Iranian nuclear facilities in June of last year. Then, in December 2025, massive anti-government protests swept across Iran, and President Trump openly encouraged Iranian demonstrators to take over state institutions, promising them that help is on the way. That inflammatory language ratcheted up tensions significantly. Then in January 2026, the United States sent 2 aircraft carrier groups, the USS Abraham Lincoln and the USS Gerald Ford, to the Middle East. Dozens of fighter jets were repositioned. U.S. military buildup in the region accelerated rapidly. And things got even more tense on February 3rd, when 6 IRGC Navy gunboats attempted to stop and seize a U.S. tanker in the Strait of Hormuz. That's a strait through which approximately 20 million barrels of oil flow every single day, or about 20% of global oil consumption. A U.S. F-35 fighter jet also shot down an Iranian Shahed 139 drone that had approached the aircraft carrier USS Abraham Lincoln. These are not small incidents. These are acts of direct military confrontation. Then came the nuclear talks. Indirect U.S.-Iran discussions were held in Muscat on February 6th, mediated by Oman, and both sides described them as a good start. A second round of talks was held in Geneva on February 18th and 19th. But here's where things broke down. Iran's Foreign Minister Abbas Araghchi said the 2 sides made progress and reached a broad agreement on guiding principles. U.S. Vice President J.D. Vance flatly contradicted that, saying Iran had failed to acknowledge the red lines set by President Trump. Those red lines include Iran completely dismantling its nuclear enrichment program, something Tehran has called a non-starter. Then, on February 19th and 20th, things escalated dramatically. CNN reported that the White House had been briefed that the U.S. military could be ready to strike Iran as early as the weekend. President Trump himself, speaking aboard Air Force One, told reporters, "So now we may have to take it a step further, or we may not. Maybe we're going to make a deal. You're going to be finding out over the next probably 10 days. He later clarified, 10 to 15 days pretty much, maximum. One Trump advisor told Axios there was a 90% chance of military action in the coming weeks. Laura James, Middle East senior analyst at Oxford Analytica, described the situation as extremely dangerous, saying the U.S. and Iran are certainly closer to outright conflict than last week. As of today, February 21st, Iran's Foreign Minister Araghchi has gone on U.S. television saying Iran is prepared for peace and that a diplomatic solution is at our reach. But at the same time, satellite imagery from the Institute for Science and International Security shows Iran continuing to harden tunnel entrances at its underground nuclear complex near Natanz, using fresh concrete. Iran is also conducting joint naval drills with Russia in the Gulf of Oman, and Tehran has formally warned the UN Security Council that it will respond decisively to any military aggression. This is a geopolitical powder keg, and silver markets are pricing in every single development in real time. So now the critical question for investors: exactly how and why does a geopolitical crisis in the Middle East push silver prices higher in the United States market? Let's break this down clearly, because there are actually multiple mechanisms at work here simultaneously, and each one adds fuel to the silver fire. The first and most direct mechanism is safe haven demand. When global uncertainty spikes, when investors look at two military superpowers staring each other down in the Persian Gulf with aircraft carriers and F-35s and gunboats, they instinctively move money out of risky assets and into safe havens. Gold and silver are the world's oldest and most trusted stores of value during crisis periods. According to FX Street's live market analysis, silver gained 2.28% in a single session just on Friday due to safe haven flows directly tied to U.S.-Iran tensions. FX Empire confirmed that gold is trading above $5,000 per ounce, while silver has also recorded significant gains as geopolitical safe haven demand surges. Commodity strategist Ole Hansen noted that the precious metals sector has so far been the primary beneficiary of heightened U.S. attack concerns. The second mechanism is dollar rotation. When geopolitical uncertainty rises, particularly uncertainty tied to U.S. foreign policy and military action, investors often rotate away from dollar-denominated assets. A weaker dollar is enormously bullish for silver, because silver is priced in U.S. dollars globally, so when the dollar softens, silver automatically becomes cheaper for foreign buyers, which boosts demand and pushes prices higher. We are seeing exactly this rotation happening right now, as investors around the world hedge against Washington policy risk. The third mechanism is the Strait of Hormuz supply chain fear. Think about this. Approximately 31% of global seaborne crude oil flows through the Strait of Hormuz. Iran has repeatedly threatened to close this strait in the event of military conflict. If that strait were closed or even partially disrupted even for days, it would trigger a cascade of supply shocks across global energy markets. Oil prices would skyrocket, inflation would surge, and when inflation expectations rise sharply, hard assets like silver, which have historically served as inflation hedges, see massive inflows. This is already being priced in, with oil prices hitting 6-month highs this week. The fourth mechanism is industrial demand intersecting with supply disruption fears. Silver is not just a precious metal, it is a critical industrial material used in solar panels, electric vehicles, semiconductors, and military-grade electronics. A prolonged Middle East conflict could disrupt global supply chains, particularly for the rare and specialty materials that silver manufacturing depends on. This adds another layer of structural support to silver prices, above and beyond the pure safe haven trade. And the fifth mechanism is investor positioning and momentum. When silver makes a strong move driven by geopolitical factors, technical traders pile in, momentum algorithms follow, and institutional money that had been sitting on the sidelines enters the market. This creates a self-reinforcing cycle. Silver miner stocks are already reflecting this. Pan American Silver Corp was up over 3%, and Hecla Mining climbed 1.5% in just one session this week as the Iran crisis intensified. Now let's look at what the technical picture is telling us about where silver goes from here, because pure fundamentals only tell half the story. You need to understand the chart structure too. The long-term uptrend in silver remains absolutely intact. Silver broke above the massive long-term resistance level of $50 per ounce back in late 2025, a resistance that had capped prices for decades, and that breakout opened the floodgates to the all-time high of $121.67. Right now, we are in a consolidation and partial retracement phase. The gold-to-silver ratio, a key metric that tells you the relative value of silver compared to gold, recently recovered toward the 64 level after dropping as low as 45 at silver's all-time high. Analysts at FX Empire note that a drop in this ratio from the 64 level will signal further upside in both metals. On the shorter-term charts, silver is currently trading around $82 to $83 per ounce and showing strengthening momentum after reclaiming key support. The MACD is positive, the RSI is firm without being in overbought territory, and silver is pressing against its upper Bollinger Band. Key technical support sits at the $73 level on the downside. To the upside, the next resistance targets are $85, then $92, then $100. A sustained close above $100 would open the door to $109, and eventually a retest of the January all-time high near $121. The bulls have the structural advantage right now. The 148% gain silver posted over the last year has not been reversed, not even close. And with the Iran crisis injecting fresh safe haven buying, the path of least resistance for silver in the near term is higher. Now, we can't talk about silver without addressing the Federal Reserve, because monetary policy is the other giant variable in this equation. And right now, the Fed picture is actually providing additional support for silver, even if it's complicated. The January FOMC minutes released this week showed that Fed policymakers are divided on the path forward for rate cuts. Several members noted that further downward adjustments to interest rates should be put on hold unless inflation continues to cool. Markets currently price in roughly 60 basis points of Fed easing by year-end, roughly 2 rate cuts. This is significant for silver because silver is a non-yielding asset. In a lower interest rate environment, the opportunity cost of holding silver falls, meaning it becomes more attractive relative to holding cash or bonds. If the Fed does deliver those cuts later this year, that is a powerful additional tailwind for silver prices. Recent U.S. economic data is also pointing toward a softening economy. December retail sales came in weaker than expected. The GDP control group fell 0.1%, raising concerns about slowing demand. A weakening U.S. economy tilts the Fed toward easier policy, which again is bullish for silver. Add the geopolitical crisis on top of slowing growth and potential rate cuts, and you have a remarkably supportive macro environment for precious metals. This is the part everyone is waiting for. Where does silver go from here? Let me walk you through 3 scenarios based on how the US-Iran situation unfolds over the next 10 to 30 days, because the next chapter of this geopolitical drama will very likely determine silver's next major price move. Scenario 1. Military conflict breaks out. This is the scenario that markets are partially pricing in right now, but have not fully discounted. If President Trump authorizes military strikes against Iran within the next 10 to 15 days, as he has warned, the immediate market reaction would be explosive. Oil prices would surge. The dollar would likely weaken on uncertainty. Safe haven flows into gold and silver would be massive. In this scenario, silver could very rapidly move back toward the $90 to $100 level, and if the conflict escalates into a prolonged campaign, the all-time high of $121 could be within reach again. This is the maximum upside scenario. Scenario 2. Diplomatic deal is reached. Iran and the U.S. reach some form of nuclear agreement in the next 10 to 15 days. In this scenario, geopolitical tensions cool rapidly. Safe haven flows reverse. The risk-off bid for silver fades. Silver could pull back toward the $70 to $75 range in the near term as peace premium is priced out. However, and this is critical, silver's long-term bull case does not go away. The structural supply deficit, industrial demand from solar and EVs, and rate cut expectations would all still support prices. So even a diplomatic resolution likely represents a buying opportunity on the dip rather than the end of the bull market. Scenario 3. Prolonged uncertainty without resolution. Neither a deal nor a military strike happens within Trump's 10-15-day deadline. Talks continue, threats continue, military buildup continues, but nothing decisive happens. This is actually the scenario that many veteran geopolitical analysts think is most likely in the short run. In this case, silver remains bid on safe haven flows, continues to consolidate in the $80 to $90 range, and grinds higher with occasional volatility spikes as headlines move the market. This scenario maintains the current momentum without triggering an explosive breakout. The bottom line across all three scenarios? Silver's long-term structural bull case remains intact. The only question is the speed and magnitude of the next move. And with Trump's self-imposed 10 to 15-day deadline expiring in the coming days, we are about to find out which scenario plays out very quickly. Now, I always want to be clear here. Nothing on this channel is financial advice. I'm an analyst and a commentator, not your financial advisor. But I can share what the data and expert commentary is pointing toward. Number 1. If you're a long-term silver holder, the geopolitical backdrop right now is arguably the most supportive it has been in years. 2 aircraft carriers, nuclear talks breaking down, military strike warnings, safe haven demands surging. These are not small catalysts. They are historically significant drivers of precious metals. Patient holders are in a strong position. Number 2. If you're looking to enter the silver market, the current price level around $82 to $85 per ounce, with the all-time high at $121, represents a 30% discount from the peak. That is not a small pullback in percentage terms, but the technical structure remains bullish, and the macro environment remains supportive. Key support at $73 gives you a clear level to watch on the downside. Number 3. Watch the Strait of Hormuz. If Iran makes any move to disrupt or threaten that waterway, expect an immediate and sharp spike in both oil and silver. The two are more connected right now than at almost any point in recent history. Number 4. Watch the Federal Reserve. Any dovish pivot or signal of accelerating rate cuts is a massive additional boost for silver. Keep your eye on upcoming U.S. economic data, particularly the PCE inflation print and jobs numbers, because those will shape Fed expectations and in turn shape silver's trajectory. All right, everyone, that is a full deep dive into exactly how U.S.-Iran tensions are driving silver prices higher in 2026, backed by the freshest data available as of today, February 21st. This is genuinely one of the most important macro stories in the commodity markets right now, and it is moving fast. The next 10 to 15 days could be defining for silver's price direction for the rest of this year. If you found this analysis valuable, and I genuinely hope you did, please smash that like button. It helps this channel reach more investors who need to understand what's happening in these markets. And if you haven't subscribed yet, what are you waiting for? We do this every week. Fresh data, real analysis, no fluff. Hit subscribe and turn on notifications so you're always first to know when the next video drops.